So, I don't know if I have to be the one to tell you this or if you already know this, but the stock market hates you, okay? Look at what happened today. We still have some time left in the trading day, but most of the trading day is over. The S&P fell to 481, the SPY that is. Within a couple of minutes, you rallied on a fake news rumor to 523. That was a bottom to top move of almost 9%. We've never seen anything like this. Ever. Even if you were a part of COVID, you never had a 30-minute interval where the markets went from down 4% to up almost 4%. That's next level volatility. Here in this video, I will share with you what this fake news rumor is, how it may not actually be fake news, as Washington says, but it could just be a little premature. There's also a lot of headlines from the Fed and from other important individuals, including Trump, threatening another 50% tariff on China if it wasn't already bad enough. So a somewhat emergency meeting today. It was scheduled on April 3rd, which was last Thursday, right? Last Thursday, the S&P fell about 5%. Friday, you fell 6%. Today, you're down about 1.5% at the time of recording this video. But with this kind of volatility, within an hour, that could change, okay, dramatically. So it's a bit of an emergency meeting, and there's some speculation on what could come from this, and I will clear the air on what you need to know. The big news that came across wires today, this big rumor that caused that 9% swing within an hour, was a White House senior advisor, Hassett, says that Trump is mulling a 90-day pause on tariffs aside from China. What's fascinating about this is we have no idea where this came from. It just came about. CNBC circulated it, Reuters, Financial Times, like all of your major news wires were circulating this news, and we have no clue where it came from. And then the White House, within just about an hour, reached out to CNBC, and they told CNBC that a 90-day pause on tariffs is fake news, that Hassett never even said that to begin with. Now, there's a lot of speculation out there today that this is not fake news in the sense of it's just premature news. There's still a couple of days before tariffs are set to take effect. And maybe they didn't want to share this news right away, but somehow it got leaked out. That maybe this 90-day pause could be coming in the next, couple of days. Maybe right before the tariffs go into effect. That's the general consensus, and I think that's why Wall Street is holding up a fair bit off of the lows. I think people kind of want to believe that this is going to happen, that there is going to be a pause before tariffs go into effect. There's also this headline that came out today that Trump issues a veto threat on the tariff bill, which doesn't make any sense considering he started the tariff bill. Not exactly sure what that means. BlackRock's CEO Larry Fink says, I still wouldn't rule out another 20% market decline. So add another negative 20% onto where we are now, and he thinks that is still possible. He also says that he is troubled that the U.S. is not a stabilizer as a country. We are a destabilizer, which basically just means people count on the U.S. to be stable, to be the voice of reason, if you will, to be a safety kind of area. Apparently, we're no longer that market. He also says that he worries that the White House actions are much more inflationary than the markets expect, which is interesting because today TLT is, well, down about 2.2%. So bond yields are actually moving higher today, which is kind of fascinating because usually when markets are selling off like this, you have like a rush to safety. Usually bonds are a rush or flight to safety trade, and it's not being used that way today. Quite the opposite. Now, Trump says today that if China does not withdraw its 34% increase above their already long-term trading abuses by tomorrow, the United States will impose additional tariffs on China of 50%. So markets didn't react to this too much because you've already basically killed off any business with China. So what's another 50%? Like, does it even matter at this point? Probably not. Now, the Federal Reserve announced a closed board meeting for today, but this was actually set into motion on April 3rd. So again, last Thursday. Donald Trump also said today, which I think is interesting considering the Fed's closed door meeting, he posted on Truth Social, oil prices are down, interest rates are down, the slow moving Fed should cut rates. Food prices are down, there is no inflation, and the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, whose markets are crashing, just raised its tariffs by 34%, on top of its long-term ridiculously high tariffs, plus not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past, quote, leaders are to blame for allowing this and so much else to happen to our country. Make America great again. Now, Peter Navarro says Vietnam's 0% tariff offer is not enough. It's the non-tariff cheating that matters. So again, some of that good news markets were hoping for last week kind of being walked back, that there may not be a deal done with Vietnam because, again, are they going to change their non-tariff barriers like currency manipulation? I don't think they can, right? Their currency would just be too weak without it. Now, if we take a look at what the indexes are doing today, the Dow is getting hit especially hard, which is also fascinating. Down about 2.58% right now. S&P is down about 2%. Nasdaq's down 1.76%. Russell 2000 down 1.33%. And look at the VIX. The VIX is above 50. It's at 50.34 at the time of recording this video. This makes August 5th look like a walk in the park. Now, clearly it spiked as high as 65, but if this holds into the end of the day, into tomorrow, that's a crazy level on the VIX. And you are opening the door for emergency rate cuts with the VIX at this level because you're risking a complete financial meltdown. The CNN Fear and Greed Index today is sitting at 4, which is in extreme fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility, extreme fear. Safe haven demand, extreme fear. Junk bond demand, in extreme fear. It's just across the board ugly here. But again, bonds are not reacting as if they are super fearful. So that gives me a little bit of pause to say, are we that fearful? Like, is it really that bad if bonds are not reacting to the upside? It's questionable. Now, the percent of stocks trading above their 50-day moving average at, COVID-style lows, okay? 6% of stocks are trading above their 50-day moving average. That's about as bad as you will ever see it. And I do think today's rumor and the explosive move kind of highlights just how vulnerable we are for a move higher. Any good news, deals worked out, a pause on tariffs is going to be seen as very positive. And you need to be prepared for that at the same time. Now, as I've said here on this channel for a while now, I think at 500 on the SPY, you're at kind of a risk parity. right? Where there's roughly similar upside potential as downside potential, roughly 20% upside potential and 20% downside potential, depending on what happens with the economy and with policies. And there's an old saying on Wall Street that's been around decades now that stocks will stop panicking when policymakers start panicking. And they're not panicking yet. The Fed is not cutting rates, although you're kind of at that level where you could see an emergency Fed rate cut anytime now. Again, with the VIX above 50, that's dangerous. But even, again, in the bond market, TLT is down almost 3% today. If this was really a panic moment, you would see people buying TLT. They're not. And we've seen really throughout this pullback, I've used the bond market as something to kind of look at as a real fear index. I don't think the VIX is nearly as good these days at representing actual fear. It is the bond market. When there is actual fear, bonds will react to it. And you just haven't seen that yet. I mean, even from the first Fed rate cut on September 18th, this line here, bonds are still nowhere even close to where they were then. Like, there's no fear in the bond market. And that gives me a little bit of hesitancy to say that this is the low, that this is the bottom. Now, again, I do think with incredible volatility like this, you will chop around for a while. You're not out of the danger zone by any means, even though you bounced from the low of the day today. I think what it really highlights is markets are jumpy for any kind of positive news. Whether or not we get that or where it comes from, I think is the big question. And again, like Larry Fink says, you could have another 20% decline from here if these tariffs actually go into effect. If there's no deal that's worked out, like that would be really bad for the economy. Another 20% lower from here is going to put you at about 400 on the SPY, which is kind of where you were at like the midpoint of 2022, right? That's really not that extreme when you put it in that perspective. And that would be a whole nother 20% lower from here. Also, as we spoke about previously on this channel, we do have economic data this week, but it's really backloaded. So Thursday and Friday are the days of big data. We didn't really have much today. You don't have much tomorrow. You have the NFIB Business Optimism Index. You have Fed Daily that speaks at 1 p.m. On Wednesday, you have wholesale inventories month over month and the FOMC minutes, although that's backwards looking, so it doesn't tend to be a big catalyst. Thursday, you have CPI, which you're expecting hotter numbers than last month. So maybe on face value, you could be priced for, maybe lower inflation to come out, and maybe that could be positive. At this point, though, I don't even think CPI is a catalyst, right? It's all about recession. It's all about tariffs. And ultimately, if these tariffs stick, we will go into a recession. So it's pricing in that recession. And then how deep is it? That's the big question. On Friday, you have PPI, core, month over month, year over year, all of that. And then you have the Michigan Consumer Sentiment Survey. You're expecting a pretty severe deterioration across the board for that survey coming out on Friday. And, that's kind of been a big market moving catalyst in recent months, especially inflation expectations. So let me know what you think about this information down below in the comments section. I do think, though, now could be a time to start putting some money to work, but it's a long cry from like the time to margin or something like that. But putting some cash to work here doesn't sound terrible. Anytime we've had a 20% drawdown, usually someone caves. Usually policymakers start to panic, and usually you're kind of ripe for a rally. Question is this the ultimate low or not? I think that depends on, obviously, tariffs and recession. So let me know what you guys think about this down below in the comments section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.